Hi, hello, namaskaram, wherever you're listening. So, today let's talk about a book called Options Trading for Dummies. This is from Joe Duarte, MD. I think I think he started his career 34 years back as a hobby. I think that's what he was. The book is really very detailed. Almost multiple chapters, almost starting from ending. I think the good thing is he also talk about ratio spreads, which I really liked. Those are like almost at the part 5 kind of thing, chapter 17. I think which chapter 17 and 18 are the last ones, but I prepared 3 versions of the presentations. I'll go one by one presentations. Let's see how I can go over the overall content. But this is definitely a good book. I think I will show you the book now. What is this? Options trading. You might be saying this is a nice book, definitely. If I have to say, and this is the books what I'm talking, which will definitely make a lot much of sense. Definitely worthwhile investing your time. Now this is a presentation I'll go through. I think in the chapters, what he chooses to say is in the initial chapters he talks about options trading and your individual investors getting the whole picture. It's like the fundamentals kind of thing, getting started and introducing options, what is call, what is put, all those things. I'm not talking about the fundamentals out here, but I'm just going to tell you here, yeah, the same thing, choosing asset, determining the directions, ups or lows, selecting the contract, put contract or call contract, how to execute the trade. He talks about how you can build your trading strategies based on calls and puts, building blocks. Everyone know if you're trying to say call options right to buy an underlying asset, you're just paying a premium and not deploying the entire capital. You have profit from the prices increase, limited risk, unlimited profit potential. Use it for bullish strategies. And puts is basically a right to sell if you think you have an underlying asset. If you think it may fall because of the results, or it may because of global supply chain issues or whatever, then you can buy the puts and hold on, and if the event finishes, you can close it off and sell it if you feel like the event is done, risk is completed. Profit from the price decrease. If the price decreases, you can make good money. Limited risk, again, because whatever premium you paid, that's all. Use it for bearish strategies. Definitely you have to look when you're taking strategies. I think in my course I'll discuss further, but call options and put options, what are the pricing for the same strike price, how is the in the money or on at the money and out of the money markets, how the prices are there. You have to see that when you're mechanics of option pricing, there is an intrinsic value to it and volatility added and time value and interest rates. These all actually combines this. He talks about that in the book. And looking closer into the algo controlled market, also he talks sectorial analysis. He talks identifying options which are risk reward, practicing before you take a swing trade. So these are important things other is takes. Another thing you have to see is popular options trading strategies, like bullish strategies, just buying long calls and buy long spreads. We'll talk about spreads and strategy. Bearish, again the same thing, but bullish you will do with calls, bearish you will do with puts. Obviously in bullish side you can sell the puts and you can protect downside with buying another puts, reducing your risk. We'll talk about the hedging strategies in one of the thing. And neutral strategies, what are the neutral strategies? Buying like iron condor and butterflies and calendar spreads. Those are really good things. Volatility strategies, how you have to use straddles and strangles for the volatility. Risk management, position sizing is very important. You should know when you will get pain. In sense, everyone have their own pain points. Someone would be with $1, another might be with $10, another might be with $1,000,000, another with me $1,000,000,000. So you should know the position sizing when you are entering, when the pain will kick in. So make sure your position sizing is correct. Diversify your If you are doing a ratio spread on one index, try to do, if you have capital, try to do it on 2 3 indices. So if something goes wrong in one index, the other index will cover up your money. And the stop losses, risk reward ratio, these are very very important thing when you are coming into trading thing. Risk management is more important than your money making thing. Money management, risk management, money management more important than making money, because if you know how to manage your capital, definitely you will able to sustain, you'll be able to run, you'll be able to walk in the markets for some time. So strike price, expiration date, premium, contract size, I think these are very important things. If you do not know all these things, do not come into the markets, do not even practice theory, go get in a good coach who can help you, get in a good mentor like me who can really help you, walk you through this is, if you learn this one, forever lifetime things. American style, European style, we can talk there. I think you can read a lot much of stuff in the Google, but I would definitely say do not enter with your theoretical knowledge. You need someone who has already done it, because if you go with, I know people who have lost thousands of dollars without, just by having a theory knowledge, coming in and losing money, because they entered on expiry date and they lost their money, because they thought like it's like an equity they can hold on forever, but on expiry date your contract expires. Setting up a brokerage account, research brokers apply for account, discount brokers are there, full size brokers are there, full advisory services, full services broker. So this is, I don't get into the technical analysis. Candlesticks, patterns, RSI indicators, Bollinger Bands. I think if you RSI and the Bollinger Bands are supporting, in sense RSI is around 80 and the candle is touching the top most of the Bollinger Band, I would love to hit the sell button there, but the same thing applies on the buy side to an RSI 20 and this Bollinger Bands downwards bubble. I would downward line, downward band. I will. Financial statements, economic indicators. Obviously, if you're doing leaps, I think in one of the places leaps is important. If you are looking at I don't know, very long term contracts, 1 year, 9 months kind of thing, it is good that you understand how the underlying asset, how it is performing. So those are important. And obviously the economic indicators, macroeconomic style and industry analysis, it's like macro to micro or micro to macro, whatever the way you like, you do it, but analysis you have to do if you really want to make a big bet. Trading plan, define the goals, how much money you want to invest, how much money you want to see, what is the risk reward ratio, assess the risk tolerance, how much tolerance you really take. 1:10 means some trades are 1:10, those are very nice lucrative trades. I would that's a $10,000 course I offer, but it's up to you, choose or not, but this isn't a very good course. Established rules, review and adjust. And role of volatility in options trading, historical volatility, implied volatility is very important. Sometimes if there is an elections going in across your country, then the volatility will increase, or the results time the underlying equity share, underlying assets is having a results, then definitely will have a higher volatility, because unknown thing is there. Markets do not like unknown, it will reflect in place of volatility. Advanced options trading, I think iron condor, butterfly spread, calendar spreads, ratio spreads. I think we will talk in the course, but these are the kind of things you can implement while you're trading. But again, I'm saying do not come do options trading purely based on your theory knowledge. There are in India they say like 9 out of 10 traders in options, futures and options lose money. I don't want one of you be there. I want you to be that 10% people who always make money like me. So if you really want to make money, that kind of thing, you should having a good plan, mindset, experience. You need a coach. I've gone through, I would have invested almost like 30,000-40,000, maybe $40,000 across all the asset classes, and I invested so much money. Now I'm saying so confidently I'll always make money. One day I can show you my profit and loss statements. Also, emotional decision making. Do not take emotional decision making. An important thing in the stock markets or anywhere, if you want to go, continuous improvement and continuous education resources. So you have to invest on books, publications as online courses, trading instructions. That's all. This is the part 1. Part 2 I'll do it later on. Thank you. Thanks for your time. Have a good time.